already made this video once and it wasn't great, so I'm making it again. So stick around until the end so you can see this video that was so nice I've made it twice. The whole crypto market has been really boring, but today I'm going to show you some charts that show why we're actually probably about to explode in one direction or the other, and some catalysts that are coming up this week that might bring volatility back to the market. As you can see, Bitcoin has been stuck between about 29,000 and 31,000 for more than a month or two. And it's been really boring, but we're still stuck in this range. Right now, the price is just below that range at about 28,814 at the time of recording. And it looks like we're trying to have a breakdown, but it's struggling to find some volume here. And it looks like we might be finding support here once more at $28,800. As you can see, we are nearing this white trend line, which we've bounced off of 3 times in the past. And it looks like this might be a really great level of support that we're coming up on that could actually send us back to the upside if we do find support here. Also, looking here at the weekly chart, we do appear to possibly still be in this cup and handle formation. And how you tell the price target for one of these is that you'll measure the depth of the cup and then extend it from the breakout point on the handle, and that'll give you a price target of about $50,000. So hopefully we will find support here on this white trend line, bouncing and going up to this price target. And if you look at the daily chart RSI, it looks like we are starting to put in a low here, which might actually be a lower low, forming a bullish divergence and bringing us down into this oversold territory, which could lead to a bounce all the way back to the upside and hopefully bringing us back to that price target of about $50,000. Also, looking here at the weekly chart Bollinger Band, you can see that it is getting really narrow, and it is possibly at the lowest point that it's ever been in the past, with this Bollinger Band width, or BBW, sitting at about 0.19, which looks to be the lowest that it's ever been here on the weekly chart. And as you can see, every time we have been almost as low as we are right now, this has indicated really short volatility or really low volatility, and it was a precursor to a big explosion to the upside. Right here, you can see that back in September of 2015, we started to see really low volatility with the Bollinger Band squeezing the price action. And then whenever it did finally explode to the upside, we saw a pump of about 100%. And I think this was really the catalyst that kicked off the bull market. But right after that, we did start to see a little bit more sideways momentum, and maybe even you could consider it a bit of a retracement. Looking here at the very last bull market that we had, you can see the price action did start to get squeezed here within the Bollinger Bands right before an explosion to the upside again. And Bitcoin saw a rally of 300%. Right after that, though, it looked like we had a pretty significant retracement right around the March 2020 crash, which everybody knows what it is, but I can't say it here on YouTube. And that took us down about 69%. Nice, or not nice really, but anyway, we did see a little bit of a retracement. And this was a huge black swan event, which I don't think we're going to be seeing again this time. So hopefully it will resemble more of the 2016 bear market or recovery from the bear market. And we'll actually just see a little bit more sideways momentum and not a huge crash like we did in 2020. Right here, we have the monthly returns and percentage for Bitcoin. And as you can see, usually August is a pretty mixed month. And on the years that we're usually starting to come out of a bear market, it looks like it's usually pretty much sideways in August. But in September, we do see a pretty massive correction almost every single time, with there only being 2 years that September was actually a green month, and those were all the way back in 2015 and 2016. In my opinion, that means that we could possibly see this bullish indication playing to the upside and taking us to that price target. But then in September, we could see some pretty big catalysts, which could actually be the Fed meeting or the fear of the Fed meeting that could send us back down for a retracement or maybe even just some more sideways momentum. Because if we do see a huge run-up like we have seen in the ends of the previous bear markets, then we might actually see a bit of a cool-off. And September is a really psychologically bearish month anyway, so I think people are going to take any opportunity that they can to take a little bit of profits. Here we have a tweet from Will Clemente that says, "Congrats if you have survived and preserved capital this long." In terms of realized cap drawdowns, this bear market has been worse than both 2015 and 2018, meaning that a ton of losses were realized from those that bought at the top of the previous market cycle. Indicated by these red areas, you can see that pretty much this has been a really devastating bear market. And in terms of how many people have been in losses this bear market, this has been the brutalest one so far. But it looks like these losses are starting to diminish, with the chart starting to go pretty steeply to the upside. And as you can see, whenever this has happened in the past, this was pretty much the end of the bear market. And before everybody knew it, we were back in profits. Here's yet another chart that shows that we could actually be seeing a pretty big pump coming up shortly. Titan of Crypto says, in the past cycles, the second dip of an extremely low volatility led to an unexpected run-up for Bitcoin. Indicated by these green areas here, you can see that we are having our second dip into extremely low volatility. And every time this has happened in the past, we started to see a pretty big run-up shortly afterwards. And this again seemed to indicate the beginning of a huge bull market. Back in 2017, though, you can see that we did dip back down into this green area right after that rally, as I was saying. And we had a little bit of a cool-off. And then again in 2020, we just slightly dipped down into that green area again. But every time this happens, it means that there's usually a pretty big run-up coming shortly afterwards, and it's really going to be a great opportunity to accumulate and get ready for life-changing wealth. Later on this week, it looks like we have a catalyst that could be sending us to the upside or ultimately breaking us back down. And in the last Fed meeting, Jerome did say that we have multiple CPI readings coming in before their next meeting, and that they're going to be looking at these really heavily to see if they're actually going to continue with the pause or if they're going to have to raise rates again this year. On Thursday, we do have the CPI reading coming out, and the expected forecast is 3.3%. So if we start to see things coming in a little bit lower than expected there, then I think we could see that rally we're looking for, because a lower reading than the forecast here is going to indicate that the Fed can continue with this pause. And it looks like we're actually expecting CPI to heat up a little bit more, because the previous was 3% and we're expecting 3.3. In other words, we're basically expecting inflation to continue to rise, and that could mean that the markets will go down in anticipation of further rate hikes. But if we do start to see this coming in a little bit lower than expected and inflation continues to cool off, then that's obviously going to be bullish for the market, because the Fed might actually be able to continue with their pause. Whales are continuing to take advantage of this situation, though, with the low volatility, because as this article by CoinDesk says, Bitcoin whale Michael Saylor might buy a lot more Bitcoin. MicroStrategy has been making higher highs here in this year as the stock market has continued to rally, and MicroStrategy does plan to sell about $750 million worth of stock. And if you know Michael Saylor, this probably means that they're going to buy about $750 million worth of Bitcoin. I don't think that this is necessarily going to be enough to send the price going to the upside significantly, but it is going to be something that people are looking forward to. And other companies are going to be paying attention to this strategy, and if it pays off, then obviously other companies will probably follow suit. With MicroStrategy leading the way and making all kinds of money from this plan, it's only a matter of time until other big companies start to jump on board. Speaking of big companies trying to jump on board the Bitcoin train, here we have another article by CoinDesk that says ProShares Bitwise have filed for Bitcoin and Ether ETFs. It looks like the Ether ETFs are actually futures ETFs, but as soon as a Bitcoin spot ETF finally gets approved, I think we're going to be seeing a lot of applications for Ether ETFs, because the SEC has previously said that it's not a security, and it just makes logical sense that that would be the next step right after a Bitcoin spot ETF. Basically, there's a whole lot of bullish news that's been continuing to come out, but for some reason, the price is still continuing to just go sideways. To me, it seems like this is just a bunch of market manipulation, but eventually the SEC is probably going to have to accept one of these Bitcoin spot ETFs, and then when the Fed starts to add money back onto their balance sheet and the market can't continue to absorb treasuries, then I think we're going to see another repeat of the effects of the government continuing to print money and giving it to all of these super powerful people that just put it into hard assets, separating the wealth gap and making most people poor, while the rest of us that are in Bitcoin hopefully can escape the system. As I've said in the past, the Fed basically has no other option to bring back the economy other than to print money and to add it to their balance sheet. And in my opinion, we've been in basically a rolling or in and out of recessions for the past year or so. But according to this article by Watcher Guru, JP Morgan no longer expects a recession in the US. Just because the government changed the definition of a recession doesn't mean that we're not going to see one, or that we haven't actually already been in one. And the more big institutions come out like this and say there's not going to be a recession, the more skeptical I become. the Fed did say that there is probably going to be a rise in unemployment and that the economy is probably going to take a hit. And as I've been saying in the past, during a recession, usually gold and bonds will be going up. But with more gold being found all the time and us getting better at mining it, the supply becomes less and less scarce. And with the U.S. government being downgraded from AAA rating to AA credit rating, this could mean that countries around the world are starting to lose faith in our treasuries, and they might not rush into the treasuries as fast as they would in previous bear markets. For this reason, I still think that we could see a decoupling from the traditional stock market and the bond market with cryptocurrency. And either way, if the economy collapses or if the Fed actually pulls this thing off and brings it roaring back, I think the way that they're going to do either one of those things is to continue printing money, and it's all going to go into Bitcoin. Check this video out.
This Tesla right here, it's a repo. It's only got 1,500 miles. Repo. BMWs, repo. Land Rovers, repo. Big nice F-150s. Porsches, Lexus, all repos. And check it out, these cars are getting repoed. These are nice, nice, nice cars.
So why are we starting to just now see all of these repos happening? It seems like the customer is not having as much money as they were before, obviously, and their credit cards are starting to rack up a lot of debt. This, along with the rising interest rates on the huge loans for these $50,000+ cars that they can't afford, are starting to put a dent in the economy and the customers' spending habits, which means that they're starting to not be able to make their car payments and things are getting repoed.
We have a massive problem right now. All these cars that you see around me, they are all repos, and they're big bank repos. So the car market has always been a precursor to bad economic times, right? You know, like in the housing market, foreclosures, they take a long time to actually work through the system and to get people out of their houses when they stop making payments. But repossessions, if you miss a couple payments, they'll snatch your car up really quick. And that's what we're seeing now. You look in your community, you look in your neighborhood, you look at your apartment building, you're seeing cars getting snatched up. I see it all the time in my comments. My neighbor just got their Charger snatched up. The guy in my apartment building, he's already lost his Mustang. Whatever it may be, you're already seeing this happen in the real world. And I'm showing you a big scene of it right now.
As he said, these are really big banks that are having these loans go bad. And if they're taking big losses on all of these repos that are going to auction and people can't pay back the loans, then maybe we're going to continue to see banks struggling. Like he said, it takes a long time for all of this stuff to work its way through the economy. And if people can't pay their car notes, then they're probably not going out to eat or buying a bunch of new things or really participating in the economy. So to me, it seems like we might have some more pain to come. And if banks start to collapse, then you know what happened last time, and we're probably going to see the Fed printing money and Bitcoin on the rise.
At these auctions, and you can look at this and see that people aren't making their payments. If they're not making payments on their cars, they're not going out to eat as much. They're not paying their cell phone bills. They're not paying all these other bills that they have to pay to make the economy keep rolling. This is a big, big bad sign. You can hear her, she's yelling about it.
This guy is on the front lines in the real economy, and he sees what's actually going on the ground. But JP Morgan says that they no longer expect a U.S. recession. So let me know in the comments, do you guys think that the economy has a lot more pain to come? Or do you think we've been in rolling recessions or in and out of recessions and it's coming to an end soon? Or do you believe in JP Morgan and that we're actually going to avoid a recession altogether and see a soft landing? Either way, thank you guys so much for watching. I hope you have a wonderful day, and I'll see you next time. Bye. This is Abisu. He's named after one of the 7 lucky gods of Japan. According to legend, he will bring wealth and prosperity to anybody who evokes his name. So don't forget to write his name in the comments or you'll bring dishonor to your whole portfolio. And check out this video right here. Say goodbye, Abisu.